The non-farm payroll is also known as the NFP report, and it is a key indicator for the U.S. economy. Non-farm payroll releases a simple data: has the United States increased or decreased its total number of jobs? This data represents the total number of paid U.S. workers of any business, excluding farm employees, private household employees, government employees, and employees of nonprofit organizations. The NFP report is used to assist government policymakers to determine the current state of the economy and predict future levels of economic activity. The number of jobs added or lost over a certain period of time is a strong guide to future interest rate movements. The non-farm payroll is released the first Friday of the month. The released report provides the data of the net change of U.S. jobs for the previous month. So if the report is released on the first Friday of October, this means that the data is referred to the month of September. NFP is the most observed fundamental news regarding high volatility impact, together with central bank events or decisions involving interest rates. Straight after the data has been released, there will be sudden spikes in price across all dollar pairs. The NFP report is so important because the United States have the largest economy in the world, so the health of the US dollar affects the health of other currencies in the world. If wage earners are growing less than expected, it is certainly not good for the US economy. Instead, if wage earners are growing more than expected, it is certainly good for the US economy. It is important to monitor the markets closely when the data is being released, and more importantly, it is vital to avoid trading during the hours in which the data is going public. Increasing your risk of being caught out with slippage is never worth chasing for an additional few pips that you can easily make on any other trading day. Instant gratification is a downfall when it comes to trading. Stick to simplicity, stick to your strategy, and try your best to avoid highly volatile trading days such as NFP Fridays. Just after the release of the NFP, spreads increased significantly, because brokers know that there are many people interested in trading for the release of this data. Many analysts, traders, funds, and speculators try to anticipate the NFP number and the future price direction. With so many different parties watering this report, and interpreting it even when the number comes in line with estimates, NFP data will tend to cause a major disruption to the markets temporarily. Unexpected volatility in the markets can often invalidate any logical technical chart pattern or setup. It is suggested to stay away from non-farm payroll and start trading the following week, once there is a stronger sense of direction.